Hello, everyone. Welcome to our series, Five with Rob. I'm here with Roland Bennett, our resident lender. He lives in McDowell Mountain Ranch. There's a beautiful hat. And of course, we're here to support our local MMR residents and the businesses here in our community. How you doing today, Roland?
You know, Rob, I'm just doing great today. Every day above ground is a great day, in my opinion. And I want to thank you for inviting me onto this. Very humbled to be out in the fans of Mattisinko Realty Group. I love what you and Danny are doing. Love working with you guys. So very, very honored to be a part of this with you.
Your exuberance is just flowing over into the screen. I love it. It's a pleasure to interview you. I've done a bunch of deals with you. You do a great job, so I wanted to get you in front of our audience. And you guys know the drill. 5 questions. You'll learn more about Roland's business, what a great guy he is, great family man, great golfer, good-looking guy, great lender, and hopefully you'll do some business with him this upcoming year. He's got great rates. He's got great low fees. So it's the full package. Here we go. So Roland, you live in McDowell Mountain Ranch. When did you move? What year did you move here? And where did you move from?
Well, my wife and I moved here to McDowell Mountain Ranch the summer of 2011. And we have been in Arizona for 18 and a half, going on 19 years. We moved here in 2002. Moved from Ohio, but we're both from the Midwest. I grew up in a town called Woodstock, Illinois. And Woodstock's claim to fame, there's a few famous claims that Woodstock has, like Orson Welles was from Woodstock, Illinois.
Nice.
Dick Tracy was first drawn and created in Woodstock, Illinois. And Woodstock, Illinois was transferred into Punxsutawney, Pennsylvania for the entire filming of the movie Groundhog Day. So that was kind of fun. And I was in high school when that happened, and we used to cut class and go down to the square and watch them film. And I got Bill Murray to sign the back of my Letterman jacket, and we used to talk with Chris Elliott, and so that was a lot of fun. But
I can't believe you left the town for Scottsdale. Come on.
Well, it's a Chicago suburb, so, you know. But anyway, we moved here in 2011. We had been here so at that point, we had been in Arizona for 9 years. When we first came to Arizona, we loved the beach. You know, kind of Lori and I's backstory. We what we say is or not what we say, but what we did is we really became a couple and fell in love in Huntington Beach, and our love for the California coast drew both of us there at the same time. And so that it's always near and dear to our heart is the beach. And so we moved here as Midwesterners together, and our goal was to eventually live on the beach in California. And here we are 18 and a half years later in Scottsdale, Arizona. But we still love the fact that we can drive 5 hours to the beach and still be there. And the way people are fleeing California now to live in Scottsdale, you know, we're really pumped with that decision. Yeah. But when we moved to MMR, actually, we had fallen out of escrow on a couple of properties that we had looked at in California. We looked at one in Redlands, which is kind of San Bernardino County, where we have family. And we had one that we tried to get in San Clemente, which was really close to the beach, and those didn't work out. And we thought, if we're going to stay in Arizona, we need to be in close proximity to a golf course. We would love to have some sort of a view, you know, and be close to, you know, things in Scottsdale. And we found this great place in McDowell Mountain Ranch, as you know, has great views of the city and Camelback Mountain from almost the entire ranch. And, you know, we, at that time when we moved here, we had in 2011, had a 1-year-old. And so just the family community of McDowell Mountain Ranch with the parks and the bike paths and everything really drew us to this community.
Awesome. So that was gonna be my second question. You beat me to it. Why McDowell? Like, you could have moved anywhere in the valley. How did you hone in on this house? Was it a price? Did it just hit your search and you're like, I want that house? Or did you, like, were you focused on North Scottsdale? And
We
obviously
were
why you stayed here, but what drew you here in the beginning?
we were looking all over, really, all over California and all over Phoenix. There's a couple of houses down in Lookout Mountain area,
You are
Central
a
Phoenix.
realtor's nightmare, you know that. Like,
Yeah.
I want to be everywhere.
Well, we wanted to be elevated. We wanted a view, and we wanted to be. That's what we wanted. We either wanted to be on a golf course or have a elevated view from our backyard. Those were that was the criteria.
Amazing.
So that's what drew us. And we got married on Tapatio Cliffs.
Okay.
So we love that area. Lookout Mountain is one of my favorite golf courses. You know, at that time we had a 1-year-old, and we weren't really like, you know, super focused on schools so much, I guess. We didn't know what that Moon Valley area had to even offer. You know, as new parents, we were so many years away from schooling that we figured we could, you know, if we decided to move or whatever, but that's what kept us. And then we found this house that was, you know, a diamond in the rough, so to speak, that had been fallen out of escrow twice.
Wow.
It was vacant, bank-owned, vacant, 8 months vacant, with a rat infestation and a scorpion infestation. And I mean, it looked like something out of, you know, next door to Atticus' his house in, you know, To Kill a Mockingbird or something. It was crazy.
You did very well, because the bottom of the market was probably September of 2011. So you're killing it right now with equity, I'm sure, and you've remodeled since. So
Well, we lucked out. It was good timing. And from the previous homes that we had owned, you know, it was kind of a wash, because the house that we bought, that we moved from, we bought in October of 2005.
It all worked out. So let's go to the third question, because we only have a half a day today with you.
Yeah. Yep.
So tell me about your business. Tell our audience what you do, what makes you different from all the other lenders out there.
Well, so I self-originate mortgage loans, refinances, purchases. I focus on VA veteran clients, self-employed borrowers. My kind of hotspot niche is self-employed borrowers between the purchase prices of $400,000 and $700,000, and also high balance VA streamlines, because most people don't realize that there's no cap on VA. So I can really help to capture those. But I do a ton of VA only because I've got a lot of respect for the military, and I wasn't able to serve myself. So it's, you know, I'm in a business that allows me to help veterans. And so I feel like it's sort of my way to say thanks to them by diving in, because for some reason, there's a misnomer that VA loans are tough, and, you know, people don't really jump to do them. And which means there's a lot of veterans that have fewer people to help them, because people don't want to deal with VA loans. And so it's really not that much harder, and many times they're easier. So I have been 18 years now originating loans. I started as a loan officer, and then I incorporated a company. I ran a brokerage with a business partner back in the heyday, you know, from 03 to 07. And everybody knows what happened in 07 and 08 with the financial meltdown and all the mortgage companies. And at that time, I had severed the business relationship with my old business partner. We dissolved the brokerage we had, and I got hooked up with a mortgage broker that allowed me to self-originate out of my home office. And this was back in 07. And I thought, okay, this will be a great temporary move for me. And I can just, you know, do some deals while I figure out my next move. And I embraced the work at home capacity, because when I didn't have 20 to 25 employees and an office to keep up, I was able to just focus on only originating. And being that I worked out of my home, if I had to run, underwriting software or deal with people on weekends or work late at night, it's easy for me to do that. And that's the aspect I love about it. That was in '07. And for the last 13 years, I primarily work out of my home office. And it's just, for me, it's more efficient. I have young kids, so it was a decision that I made to not go into the office so that I can, see them off to school and see them come home from school every day, which is just something I wouldn't trade for the world, and just feel very, fortunate and grateful to be in that position to, be a part of their school days and all that. Mm-hmm. But then I ended up, the company that I worked with was a brokerage. They ended up merging with a bank, a correspondent mortgage bank called People's Mortgage Company. And when I was at People's Mortgage, I was still, they kind of still had some brokerage loopholes that they left open for me, because they knew it that, deep down I'm a broker. And so I would broker a lot of business, and the business I would broker there were the files that I felt comfortable getting through the wholesale channel versus the banker channel. And that's what I spend my days now, because as of a year from now, I left the correspondent bank to go back to full-time wholesale broker. And the reason was, the loans have found that I was brokering while at the correspondent bank were lower rates and lower fees. And so I was starting to feel guilty that every loan that I didn't broker, that I was closing in-house at the mortgage bank. And these mortgage banks are not like Wells Fargo, where you can go open a checking account. These are the correspondent mortgage banks, like the Guaranteed Rate and the Fairway and the AmeriFirst and Academy and People's Mortgage and Nova Home Loans, and all these banks that underwrite in-house, is what they say, and they fund their own money, which they claim that gives them more control. But the truth of the matter is that they're underwriting to Fannie Mae and Freddie Mac's guidelines, to VA guidelines, to FHA guidelines. And just because they lend their own money and have in-house underwriting doesn't change the fact that a borrower has to meet Fannie Mae, Freddie Mac, FHA, or VA guidelines. They don't get the ability to loan money on a conventional Fannie Mae or Freddie Mac loan that doesn't meet the Fannie Mae or Freddie Mac guidelines, unless they want to do some sort of portfolio, bank-only loan or whatever that they keep. They can make their own rules on that. But when you're getting a Fannie Mae conventional loan or a VA loan, you got to meet the guidelines. So what they do is their business is, they've got originators, they bring in the loans, they do it all in-house, they charge underwriting fees, they charge management fees. They've got the underwriting manager and the funding manager and closing manager and sales manager and loan officer manager and upper management and senior management and all these salaries at the bank that are not originating loans, which is why they have to set margins higher, which drives rates higher and fees higher. And, about a year ago, it was like, well, I was brokering half of my volume, and I was at the bank. Banks don't like you to broker loans. So I'm tiptoeing on eggshells, brokering loans here and there and putting some, trying to keep as much in-house. And I had this epiphany that it's like, well, everybody that I'm underwriting in-house, they're paying a slightly higher rate with fees. And I thought, well, the number one thing that I've found in 18 years doing loans and originating loans and closing loans for clients and realtors is that all borrowers expect good communication. They expect clear communication. They expect upfront pre-qualification of knowing what the guidelines are, so there's no surprises when you get to underwriting. And they expect purchase loans. They expect them to close on time. If you give me a contract and say, hey, Roland, I've got this borrower. Do they qualify? Yes, they do. Can we close in 30 days? Yes, we can. They expect in 30 days that that loan closes. Whether or not you're a bank or a broker or whatever, those are like minimum expectations. But what I found in 18 years is, you know what people care about when they get a mortgage loan? The number 2 things that they care about: what's my rate and how much are the fees, period. Bottom line. And so in the wholesale market, I'm selling loans wholesale and putting them directly with the lenders, that places that the correspondent banks are underwriting for. So the places like the Fairway and the Academy Mortgage and all that, they underwrite loans, then they sell them to the investors. And because they have this brick and mortar and all these underwriters and all this staff, and they have to charge them money. So all I'm doing now is brokering the loans to those same investors that they're underwriting loans and selling to the investors, only on the wholesale side, not on the retail correspondent side. So by being able to wholesale broker the loans directly to the lenders, I'm not underwriting the loans, and neither is Barrett Financial, which is the brokerage that I chose to hang my licenses with. And so we don't charge underwriting fees. We don't charge processing fees or loan broker fees. The wholesale banks that I send the loans to pay us the commission based on the loan amount for giving them the loan and not sending it to these lenders over here, because we have many choices. Now I get to choose all of the lenders that end up holding the loans and servicing the loans for Fannie Mae, Freddie Mac, VA, FHA. I choose based on knowing that they're going to get the deal done, speed of the loan process, but number 1, lowest rates, lowest fees all the time. And that's my focus, because frankly, that's what people want. They want the lowest rates they can get, and they want no fees. So it's fun.
I was very happy when you made the switch. Not that I thought you were expensive last year, but you took such good care of my clients, especially the self-employed. You just know the ins and outs. You help them along the way. You pre-qualify them. You give them great advice. But now with Barrett Financial, your rates and your fees are so low that you are really a force to be reckoned with. And
it's the best of both. It's the best of both worlds in that aspect.
Yeah. So when I talk to a client and it's a fit to work with you, I have no doubt that you are going to take great care of them and you're going to beat other agents' fees and rates. So hats off to you.
Well, thank you, man.
Yeah, no problem. So tell me, give us an example, our audience an example of one way you saved the day or exceeded client expectations. You have a good story for us you'd like to share?
Yeah, I'll give you a general story that I run into a lot. Because I end up being the save the day guy a lot, because I know a lot of realtors that I've done loans for, and they've referred business, and I've, gotten things closed. So then they know me, they know what kind of, education I give to borrowers. So when they're out as the selling agent now, and they have, a buyer come in, and then all of a sudden the buyer's agent says, we've got an issue, there's a problem. Then they say, well, what's the problem? And when they find out if it's an underwriting or a loan problem, then they say, well, instead of the buyer still wants the house, the seller still wants to sell, and instead of just accepting the decline that you're being told you're getting from underwriting, why don't you just see if a guy I know in the business can take a look at it and see if there's any way to save the deal. And so I'll go ahead and look at the loan. And in one phone call, typically, excuse me, with the buyers, I can find out, what the problem was and whether or not it's something that could be overcome. Because sometimes it's just, it was just poor pre-qualifying and the people just don't qualify. But, buying a house comes down to 3 simple things: assets, income, and credit. You either have the credit that's acceptable to whatever loan guidelines you're doing, or you don't. You have income that is acceptable to the underwriting guidelines, or you don't. And the assets, you either have the money from an acceptable source for your down payment and reserves if you need them, or you don't. It's not so subjective, and it's not such a mystery. And that's what I find in all the times that I'm saving a deal or helping somebody overcome, you know, a decline or whatever, is that I say, well, what did your loan officer tell you about this? Well, they didn't tell me anything. They just told me that, you know, I just sent them all my stuff and they told me I qualified, and then they submitted it to underwriting, and then there was a problem. Well, what'd they tell you the problem was? Well, I don't know. They just said something about it. It's like, it's this mysterious decline, and they don't know why they were told this. And you know, you dive into it, you don't even have to go that deep to find out that they weren't asked the right questions. They weren't given the right information. The income wasn't calculated appropriately. And then lazy work up front equals problems in underwriting. And the last thing that you can have in this business is when you have a seller selling a house, they're typically buying another house. Those people are typically buying another house. And then you have, when there's a problem with a loan, there's not a problem with that guy not getting the house or that family. There's like 5 families down the road that are counting on this. And you can't afford. I mean, if the borrower doesn't qualify, why are they in contract? How are they even with an underwriter?
I think the key is diving in. I think that's what you do so well with your experience. You're almost like a quasi accountant. You just know the right questions to ask. You keep them on track. Like, for instance, one of my clients, recent clients, we're working on a deal right now. They had to write last year they had to take a loss on their business, self-employed business, and they weren't sure if they were going to be able to buy a house because of that situation. And you helped them out, and we're on track. We're under contract. You want to tell us?
And that's one of the biggest cases that I see in self-employed borrowers, is that they have a loss on their tax returns from a previous business that they carried over. I'm doing a refinance right now for a borrower that came to me. They had to refinance because they were in a private balloon mortgage, and they were going to lose the house because these people are going to foreclose or whatever. And they couldn't get a deal done because of their losses on their tax returns, and they're self-employed. And they had I'm dealing with these guys right now that I just got their loan approved, and they're going to be closing at the end of the month. They have $1.5 million loss on their tax returns. Most loan officers, you're self-employed, send me your tax returns. They get the tax returns. You've got $1.5 million loss on here. I can't do anything for you. And they move on to the next one because they're in some office at some correspondent bank. They've got the senior, their sales manager breathing down their throat, saying, cut bait and move on to the next one. Let's deal with people that are, and we got this sales funnel. And my sales funnel is, I'm going to help everybody that qualifies. And if they don't qualify, I'll let them know. But one of the biggest things with these losses is that the losses aren't from their current company. The loss is from a previous company that they no longer own. And legally on the IRS tax code, you can carry forward losses from previous companies that you took losses on. And the underwriting rule is you don't have to count that. You can ignore those carryover losses because it was a totally different company. It's not even what they're doing now. So the number one thing I would say, Rob, that most important to me is loan officers are looked at as salespeople. And I don't look at myself as a salesperson trying to sell somebody into a loan, because if you want to buy a house and you don't have the cash, you have to get a loan. I don't have to sell you into the fact that you're borrowing money. That's just your position. What I look at myself as a loan officer is really an underwriter. I have to be a better underwriter than the underwriter that gets your file. Because then if the underwriter has a problem, and I know that it's a guideline that they're interpreting in the wrong way, or there's an alternate form of documentation that can satisfy a condition, I have to then go explain to the underwriter why they need to clear a condition or why we can use something else. So I've got to be better than the underwriter that's underwriting. And that's in 18 years of closing, I don't know how many thousands of loans, I've learned the guidelines. I know what the guidelines are for FHA and VA and USDA and Fannie Mae and Freddie Mac and all those. And that's what makes, I guess, differentiator of loan officers is my knowledge of the underwriting guidelines to be able to underwrite transparently up front and give clear answers and explain to people why they would have a Freddie Mac loan versus a Fannie Mae loan, why FHA isn't the way to go just because you're a first-time home buyer, why you can't get a Fannie Mae loan, maybe you have to get an FHA loan. And so you need to know the guidelines to be successful and to help people so that you can prevent them from getting in a position to where 2 weeks or a week and a half before close of escrow, their loan officer at the bank just submitted their loan, and they've already got the moving van scheduled for next week, and the loan's going south. You can't have that.
You write a great explanation letter, and that's the special sauce. It's like you said, you're like an underwriter before it gets to your underwriter. So you're telling people up front how to solve issues that they have with other lenders, or if it's a first time go around, you're just clear expectations on what we need to do to get it pushed through.
And it's not, and if I know I'm right on a situation, it's about not taking no for an answer. And I have no problem going to an underwriter's manager's manager and lighting a fire at a lender,
right,
to when I feel passionate and confident that the loan should go through and this one condition is should be cleared. I don't take no.
I love it. That's like the New York way right there. So you
or Chicago.
You've been working from home. Yeah, Chicago's similar. You've been working from home for years. So COVID's really 6 months into it. It's really affected people differently. It's almost like it was like you just hit the ground running with this. You're really comfortable in your home office. You don't need to go out to Kierland, an office somewhere. So obviously COVID's affected everyone this year. Is there anything you'd like to share with us that how it's affected your business, good, bad, indifferent, just the way you're doing business a little differently now?
I have, it was funny because when COVID hit and people were like working at home and things were shutting down and, being that I have been working at home for 13 years and I've been home with the kids and, it wasn't such a sticker shock to me as a lot of families I know that had left the business, the going to the office and working at home, I know it was shocking. I mean, but being that's, how I've been running and working, there was really no change for me in that case. I just got actually really busy because as people were planning trips and planning vacations and in their regular lives, they ended up, refinancing because rates are hit an all-time historic low. It seems like every year the rates are at a new all-time low. I'm refinancing people now that we're at a 4%, and people look at a 4% now and think it's like subprime. Like they can't believe the rate's so high.
Right.
And so I've been doing a lot of refinancing because frankly, people are remodeling their home to build a home office. They're trying to limit expenses because maybe their hours were cut short due to COVID. Maybe their businesses aren't, thriving because they've been forced to shut down because they don't have the luxury of being, a big box corporation that wasn't forced to shut down. And so in that aspect, I've been, very busy with that. And I've seen a big time change. The biggest sector of my mortgage loans that have increased is purchases of secondary and vacation homes, because now that people, they're not sure even when they can travel, they don't want to travel, but they got to get out of the house. So they're now purchasing second homes, and especially here in Arizona, up north, And then they're, you know, Airbnb-ing it, and that business has gone crazy. It was actually really bad at first. Airbnb like hit a wall because nobody was Airbnb-ing anything. They were canceling their Airbnb reservations because nobody was, you know, it was very uncertain. And then after that, after a couple of months of COVID, people are like, oh, well, we can't get on an airplane, and we're, you know, California's beaches are closed. What are we going to do? I don't know. Let's go up north. Let's go to Flagstaff and rent a house for the weekend. So now that business is picked up, and now people are saying, well, why don't we buy one of these houses and be the landlord of the Airbnb? So I've seen a big time increase in that sort of activity.
Nice. Well, that's great information. Appreciate you being on here today. Once again, it's always great to hang out with you. You're a lot of fun, and hopefully we'll get to golf sometime soon.
Well, you know, that's the conundrum of Arizona golf, is right when the weather breaks and you're itching to get out there and it's not 120 degrees, then they close all the golf courses to put new grass down, and then you're like, oh man, it's just like, where can I play? But yeah, I really appreciate it. And Rob, I can't say enough about you and Danny and what you guys are doing business-wise and, you know, personally, and just being a part of the community. You guys are always out there, always helping. A great family man, a good example for everybody out there. And so, you know, I really appreciate what you guys do, and thanks for letting me be a part of it.
Excellent. Well, go get them. Have a great weekend if we don't talk.
All right, man. Thanks, Rob.
Right.